let me get down to analyzing the macroeconomic problem. What will be the new government confronted with in terms of macroeconomic challenges? What are the low-hanging fruits that can be plucked if there is a stable government? How much and how can growth improve in the first year, FY15? How much and how can the fiscal deficit be cut in the first year, FY15? And how much can inflation hurt or decline this year? Joining me to discuss these issues are Dr. Pranab Sen, Chairman of the Statistical Commission, Sajid Chinoy, economist at JP Morgan India, and A. Prasanna, Chief Economist at ICICI Securities Primary Dealer Unit. Gentlemen, welcome. Well, Dr. Sen, first perhaps a no-brainer question. Is a stable government a major catalyst for GDP in the first year itself? Or irrespective of the quality of government, GDP can't be given much of a push in the first year in office?
Well, you know, the thing is that it depends upon the circumstances. We are today in a situation where the incumbent government has already taken some steps. There's a very large number of major projects which are just waiting for the new government to come in to take off. So without actually doing very much, just presenting a stable government, I think is enough to get the growth momentum off.
Okay, growth, what would you exactly mean numerically in terms of growth momentum?
Yeah, as I said, there's a huge backlog that's just waiting there. And my expectation is that if they do take off quickly, I mean, it may well be the case that people may hold off for the budget to be presented. But my sense is that if the investors feel that the government is going to be stable, you're possibly looking at something like 7%.
7% in FY15, Dr. Sen?
In FY15, yes. Okay.
Well, Sajid, I'm starting with you, expecting that you're going to oppose this because I just read your report. Would you think growth can be that good even if there is a stable government? I thought you were of the opinion that a large number of projects require state cooperation.
I think that's right. I think the two different issues here. Dr. Sen is exactly right. A number of projects have been cleared in the past, and some of them are shovel-ready, so to speak. And if you have a new government, they're waiting for the uncertainty of political uncertainty to be resolved. They will be implemented. But I just want to point out that a lot of those projects are in the power sector. And so in a way, even though the clearance has been given, quote unquote, the problems in the power sector are well known. It's that the financial sort of struggles of the state electricity boards is what's preventing them from actually purchasing some of this power. So I'm a little bit skeptical about how many of those power projects actually get executed in the next year. I guess the more fundamental point is if you look at the residual stock of projects that are still left, a large number of those are stalled today because of issues that fall more in the domain of the state. Land acquisition, again, power pricing, SEBs, and I'm a little more skeptical that that will get done in a hurry because a new government, however strong, however well-intentioned, will not have much jurisdiction over those largely local and state-related issues. I'll just make one more quick point. I think we underestimate the fiscal drag that will kick in this year. I expect the new government will pursue the fiscal roadmap given the external pressures from rating agencies. If you have to reduce the fiscal deficit from 4.6 to 4.1, that's clearly good for macro stability, but will impinge growth quite meaningfully in this coming fiscal.
I will, of course, have all of you give me your thoughts on whether that 4.1 of the vote on account can be reached at all. But let me finish the growth argument and get Prasanna in. Prasanna, what is your best case scenario of growth, assuming a stable government, and your worst case scenario, assuming a none too stable government, and maybe several rounds of confabulations before we even get a government?
Okay, so best case scenario would be something like 6%, and the worst case would be something like 4.5%. So 4.5% would be roughly kind of, it will be flat, similar to last year. I think that 4.9 is going to get revised down a bit. So in the worst case, we are looking at economy kind of flatlining, and in the best case, I'm not looking above 6%.
Okay, so would it be fair to say that you also agree with Sajid that although some steps have been taken, you don't see a lot of those projects getting underway?
Yeah, so I think that point is well taken. It's going to take time, but I would also like to step back and think that from a government's point of view, I think they shouldn't be too concerned about this year's growth. I mean, of course, no government can publicly say that, but I think ideally what they should have in mind is whatever steps they're taking now is going to bear fruit in 12 to 18 months' time, and if they have that kind of a time horizon, I think it'll be better for them. Otherwise, if they get too focused on this year's growth, it can actually lead to mistakes.
Okay, well, then let me just present Sajid's and Prasanna's estimates of the current year to Dr. Sen. Dr. Sen, the forecast here is pretty gloomy. Sub 5% if there isn't too much stability, and even the best case is just 6%. And Sajid, there's reasons for that so much of state cooperation is needed. What makes you so confident? Don't you see these as formidable challenges? DISCOMs not able to buy power, land acquisition requirements that are so formidable that projects cannot kick off, in almost 50% of the cases pending with the CCI. Why are you confident that 7 should be possible?
Well, you know, this is not the first time we've been in a situation like this. It's happened to us a couple of times earlier, and it's really quite remarkable how we underestimate the ability of the corporate sector to manage the state issues. Sajid's point regarding power is absolutely right. I mean, the power sector isn't going anywhere, but the projects we are talking about are not going to be coming on stream in the next couple of years. They're going to take at least 3 years to come on stream, and the question is, will people start putting the money in now? Would they have an expectation that the government will actually get the power mess straightened out? And my suspicion is, so that's the kind of story that the new government is going to have to project. And I'm reasonably confident. Now 7% is an outside limit that I'm giving.
Yes.
But I agree that, you know, if you don't have a stable government, or if the perceptions are that the government is not going to be stable, then what you are looking at is a 4.5 to 5% range.
Okay. No, where do you see the growth coming in FY15, even assuming stability? 7%, what would be the contributors? How would you break it down? If you yourself are saying that some of these projects are going to take 3 years.
No, basically remember, Lata, when investments start happening, they add to the demand side. So you're not going to see the sectors where the investment is taking place, which is going to lead growth. It's going to be the upstream activities, and it's going to be the multiplier effects that work along with it. So if you think you're going to see huge increases in sectors like power, that's not going to happen.
Okay, well, actually, let me take forward what Prasanna said, that, you know, you really, the government should not worry about the first year's growth, but believe that not much can be done up until 18 months and proceed with that assumption. If the government were to proceed with that, yeah, sorry?
No government can say that. We're not concerned.
No, they can't say that, and I think Prasanna admitted that.
Yeah.
He's just saying that it is going to anyway take 12 to 18 months for their efforts to bear fruit. So the growth in the first year cannot be materially different. Now the problem with this assumption is, then what happens to tax revenues? And therefore what happens to your 4.1% fiscal deficit that the vote on account has set as the target? That question after the break to our 3 economists.